Hello girls. The next video is for the next question. Now we finished the third question in the last problem. Now fourth question will again be your homework. It is similar to what you have learnt in the third question. So let's go to the fifth one today. The fifth one, if you look at it, it is just a very simple question which shows basically the journal entries only for a particular transaction. It is not a full-fledged question. It is only with regard to the last transaction, the third journal entry, wherein if the shares or debentures are issued at premium or at discount, how will you record it? That's it. It is just a small part question. The next question that I'm going to do will be this incorporated in your full 14 mark or a 6 mark question. So we have calculate the purchase consideration from the following and also past journal entries in the books of the purchasing firm. So you have the purchasing company issued 1000 equity shares of rupees 100 each at rupees 60 per share as rupees 50 per share paid. That means the share is 60 rupees worth each, but the fully paid up, that is the at par, that is the value of the share actually is 50 rupees, but they have issued it at 60 rupees. That means what is actually worth 50 rupees has been issued at 60 rupees. So that extra amount that it has been issued as is going to be the premium, because premium means an extra amount more than what is actual the value. Then 1000 preference shares of rupees 100 each at rupees 2 discount as fully paid. So now even though the value of the shares are 100, they are going to be issued at 60 rupees instead of 50 rupees, which is considered as fully paid. So the actual value of 100 rupees equity share is only worth rupees 50 rupees, but instead of 50 rupees they are issuing it at 60 rupees. So therefore that is the extra amount. Same way here for preference share, the actual value of each preference share is 100 rupees, but they are going to issue it at 2% discount. So 2% discount means what? 2% on what? 2% on the actual price. So 2% on 100 is 2 divided by 100 into 100, which is equal to 2 rupees. So discount means it is always a reduced value. So therefore 100 minus 2 is 98. So that 98 rupees is considered as fully paid up. Then 1000 10% debentures of rupees 100 each at par. At par means same price, no more money, no less money. And then cash rupees 2,42,000. Now again we need to find out the purchase consideration of or the discharge of the purchase consideration. So the first step is calculation of purchase consideration. Now in the books of the company, I forgot to write that. Wait. Calculation of purchase consideration. So you have 1000 equity shares. What is the price at which we have issued? Now be careful, we are issuing it at rupees 60 each, even though its actual price is only 50 rupees, which they have taken as per share, but we are issuing it at 60 rupees. So if someone comes and buys my equity share, even though the actual value is 100, but I am selling it at 50 rupees, but actual selling price is 60 rupees. So therefore the price at which I am going to sell it is going to be 60 rupees. So you will take the price at which they have actually issued it. So this is equal to 60,000. Then again 1000 preference shares of rupees 100 each. The actual value is 100, but we are issuing it at 2% discount. That means so 100 into 2% is how much? Which is equal to 2 rupees. So we are issuing it at discount means minus 2, which is equal to 98. So rupees 98 each. So this is the price at which we are giving. So when someone comes and asks me one preference share, I am going to give it at 98 rupees, even though it's worth 100 rupees. So what am I going to get? 98,000. Then you have 1000 10% debentures. This I told you that day itself. This 10% is only for the interest rate of debentures. You don't have anything to calculate with it when you are doing the purchase consideration. 10,000 debentures of rupees 100 each at par. That means no less, no more money, same price. So this is equal to 1 lakh. Then you also have cash. Cash will be taken as bank, remember, which is equal to 2,42,000. So when you total this up, you will get your total purchase consideration. So that will be 60,000 plus 98,000 plus 1 lakh plus 2,42,000, which is equal to 5 lakhs. Now this is equal to total purchase consideration. Now again, since this is net payments method, we don't have to worry about the next step of actually showing the discharge, because this itself is going to be the discharge of the purchase consideration. Now when you write this, in case for your reference, if you want, here in bracket write what is the actual value of the share. Actual value is rupees 50 for equity shares, and actual value of preference shares is rupees 100. Debentures is the same price. Now why I am asking you to write this is, you can write it in pencil in bracket. This will not be used for calculation here, but this will let you know later when you are writing the journal entries that there is some change in the prices. So therefore in the third journal entry, you should be making some extra additional entries while passing the main journal entry. Now how does the journal entry come? Journal entry in the books of, there is no name for the purchasing company, so in the books of the purchasing company. So this will be the heading. Now let us go to the journal entry. Now again, I will first show you journal entries for all of them separately. That is, when it is issued at discount, when it is issued at premium, when it is issued at par. And I'll also show you when you pass the journal entries as a whole in a full question, you can pass them off together or you can pass them separately depending on which is suitable or which you are more familiar and more clear with. Now let's go to the first one. For the first one, with regard to, now we are only going to show the discharge of the purchase consideration journal entry, only the third journal entry. Now what is the third journal entry supposed to be? Firm's account debited to the different ways in which we have given the purchase consideration. Now instead of showing it together, I am going to be showing it separately. Now how is that going to be done separately? We are going to have first for equity shares, firm's account debited. You don't have the firm's name, so firm's account debited. This is only for equity shares. We have always done all of them together. Here I am showing them separately for your understanding. Remember, I will also show you a combined journal entry. This is how it will come when you are showing everything together. So firm's account debited, leave one line, to equity share capital account. Now equity share capital account, preference share capital account and debentures will always show what is the actual value of the shares. It will never show the increase or the decreased values. It will always have to show what is the at par values. Remember that. So if you are giving it at a discount or at a premium, that discount or premium amount will not be taken to the share capital account. It will be shown separately. That is how you identify when you see the journal entry, how much is the actual value and how much is the extra or the shortage amount which you have taken into consideration while issuing it at premium or at discount. Remember this. So you will not take the whole 60,000 directly, but you will have to show the breakup. What is the actual value of the share? 50 rupees. So 50 rupees into 1000 would be how much? 50,000 rupees. So this is the actual value of equity shares. How did I get this? 50 into 1000 equity shares. But how much have I issued it? I have issued it for 60,000. How did I get that 60,000? 50,000 as the actual value and a premium. Premium means what? It is a bonus for me. It is a profit for me. And profit means it is always the credit side. So therefore, to securities premium account. The securities premium account is for both debentures, for for preference shares and for equity shares. When you are issuing at a premium, that premium amount is taken to an account called as securities premium account. So this will show what is the premium at which you have taken the shares at. Now the number of shares is 1000, but what is the premium at which you have given? The actual value is 50 rupees, but you have given it at 60 rupees. So what is the difference of extra amount? You have given extra of 10 rupees per share. So that is equal to 10,000. So 50,000 is the actual value of equity shares. 10,000 is that premium amount which you have collected from the equity shares. So total equity share amount that you have collected is going to be 60,000. So that's why I told you both the amounts have to be shown separately. This equity share capital account will come in the balance sheet under share capital, which will be only the actual value of the capital. And the securities premium will come under reserves and surplus column in the liability side only. Am I clear, all of you? The next one, this will be being equity shares issued at a premium. Now since you have already shown the calculations here itself, you don't have to say how much premium and all that. Then the next entry is with regard to the preference shares. So when it comes to preference shares, again firm is receiving it, firm's account debited. How much is the total preference share capital that you have given? 98,000. Now firm's account debited, this is the amount that you have received from the firm, which is equal to 98,000. Now this, leave a line again, to preference share capital amount. This again I told you, you have to take whatever is going to be the actual value of preference shares. The actual value of preference shares is 100 rupees. So 100 into 1000 shares is going to be 1 lakh. But you have issued it at only 98,000. Why is that difference less? Because you have issued it at a discount. Discount of how much? 100 minus 98, 2 rupees. So 2 rupees per share. So into 1000 is going to be 2000. Now, why is that discount? Which side will it come? The discount is a loss for us. Now, when you give anything at a discount, it means you're getting lesser value. So therefore, it is a loss. Loss has to be debited. So therefore, the discount is to be taken to an account called as discount on issue of shares account debited, because it's a loss. So what is the amount? 2 rupees into 1000, which is equal to 2000. Am I clear, all of you? So this is how you show the discount value, being preference shares issued at discount. So did you understand the difference between when it is at premium, what is it, and when it is at discount, what is it? Premium means it is at a profit for us, so it has to be credited, and when discount means it is a loss for us, so it has to be debited. How do you calculate the amounts? When you are doing the purchase consideration itself, show this so that it will be easy for you. You don't have to go back to reading the question. Now, they said that 1000 equity shares, though the value was 100 rupees, it is actually considered as 50 rupees each. But instead of 50 rupees, we have collected it at 60 rupees. So therefore, there is an extra amount which we have collected. When you calculate the purchase consideration, you will calculate it at the price that we have given, that is 60 rupees. But when you show the discharge, you have to show that 60 rupees separately as to how much it is actually worth, 50, and how much is that extra amount which we have calculated, which is 60 minus 50, 10 rupees. Same way for preference shares, they said that it was worth 100 rupees, but we have issued it at 2% discount. So therefore, 2% on 100 is 2 rupees. discount means it has to be subtracted, so therefore it is 98 rupees. The same way they can give you a percentage for premium also. So that time you will calculate again 2% on 100 is how much, or 2% on the original price is how much. Add that up to the original price, that will give you the added new price, that is at premium price. So this will be at 98 rupees. How much is it? Again, we are taking what we have given, not as the original price. What is the price that we have given to calculate the purchase consideration. But when we show it, we show what is it actually worth and why have we collected less or more. In this case less, it is worth 1 lakh rupees because it is worth 100. But we have collected only 98 because 2 rupees per share is going to be our discount and it is a loss. So therefore it will come on the debit side. The third one is with regard to debentures. So again, firm is receiving. So firm's account debited. This is for debentures, 1 lakh. 2. Debenture is issued at par. So therefore there is no discount or premium which you have to take. So you will just directly say to 10% debentures, account 1 lakh. So whatever it is worth, we are giving it at the same price, being debentures issued to the firm, or just issued. Next, we also have given them cash. I told you in the previous question, cash will always be taken as bank because you don't know whether you have extra money or you are going to be taking it as an OD from the bank. So we'll always take the cash amount as bank amount. So therefore, firm's account debited. This is for the cash which we have given, 2,42,000 to bank account. This is for the cash amount, 2,42,000 being cash given to the firm. Now this is your journal entries. If you are showing all the 4 payments in individual or separate journal entries. What if we want to show it as a single journal entry? Now you can also show it as a single journal entry. Don't show both. Either show it separately or you show it together as one single entry, whichever is convenient for you all. Now how will you show it? Firm is going to be the receiver. So firm's account debited. We don't know the amount. We will take it up later. Now coming to equity shares is issued at a premium. Leave one line because you might have to write the discount for something. So you have to leave one line or 2 lines. 2. Equity share capital. This is equity share capital account is for the amount of equity share capital which is originally given. Original price is 50. So 50 into 1,000 rupees is going to be 50,000. Equity share is issued at what? It is issued at premium. So therefore, you will take that immediately. Take it along with it immediately. Don't wait to write it at the end wherein you will forget. So equity shares is issued at a premium. Premium means it is a profit. So it will come on the credit side itself. So 2 securities premium account. What is the premium amount? 10 rupees for each share. So 10 into 1,000 is 10,000. Next, coming to preference shares. Preference shares was issued at a discount. So therefore, again, first we will write it as 2 preference share capital account. 2 preference share capital account. What is the original price of the preference share? It is 100 rupees into 1,000 value. So therefore, it is 1 lakh. But you have issued it at a discount. So discount is a loss. So on the debit side, you have left line, right? So over there, you will write discount on issue of shares account debited. How much have you issued the discount? It is 2 rupees for every share. So 2 into 1,000 is 2,000. Now for one type of preference share or equity share, you will only have discount or premium. You won't have both discount and premium for the same type of share. Remember that. You can't issue it at more and less price for the same product. Then for debentures, so 2 debenture account, 10% debenture account. It is at par, so therefore you don't have any premium or discount which has to be shown. Then you also have cash, so therefore 2 bank account, which is equal to 2,42,000. So add up all this and subtract it from what is there on the debit side already. that will give you what is the balance which has to go to the firm's account. So when you total, the debit side total is there as 2,000, credit side total is 50,000 plus 10,000 plus 1 lakh plus 1 lakh plus 2,42,000. This is equal to 5,02,000. So how much should I add up on the debit side so that it becomes equal to 5,02,000? It is nothing but 5,02,000 minus 2,000. So this is equal to 5 lakh. So I get that balance value on the debit side. So if you see 5,02,000 and 5,02,000, both values are same. Now, being purchase consideration issued as equity shares at premium, preference shares at discount, debentures at par, and cash. Okay, so this will be your journal narration. So you will say that you have issued things at discount, premium, and at par. Now, when you are passing this journal entry, be very careful wherein you have to record both the discount or the premium for each type of capital that you have issued. If it is at par, then you don't have to worry at all. It will be simple. It will be firm's account debited to equity share, to preference share, to debentures, to bank. Only when there is discount or premium, that also has to be recorded. So if you want, you can show them separately as 4 different entries or 3 different entries depending on the number of types of discharge. Or if you are showing it together, you have to be very careful when you are showing it. So next question that we are going to take, that is the 7th question. We will take up a question where this is also incorporated in it, and with that we will have a full-fledged question. Thank you.